Hello guys, welcome back to our YouTube channel. Remember, on this channel I let me my trade setup on my trade pairs, and this is a quick update that I want to give you guys on how to be able to get your setup, especially if you are a day trader or a scalper day trader. Like, don't like spending much time on the chart. I'll give you a quick way you can be able to get your setups, and just you have to master this strategy. Once you're able to do that, I think on the long run you'll be profitable and you spend less time on the chart. So this strategy is majorly focused on what I would say your fib level, your liquidity, and then you looking out for demand and supply in the market. So demand and supply are majorly areas whereby price are likely going to buy or sell. So for you to mark out a valid supply area, you should be able to do it from a high time frame so that you can be able to spot those other blocks or those demand or supply you get. So the market is likely going to react from, especially if the demand or supply has an inducement very close to it, and there is a liquidity whereby market is tending to get to. So once you're able to figure all these things out, and make sure that you are following immediate market structure, not just the overall market structure. But there are times where markets can be in a bullish phase but needs to make a retracement, maybe a liquidity area, so it can buy from there. You get. So things like that can drive markets lower or higher. So if you're able to mark out your immediate market structure, your liquidity, then demand or supply that are very close to inducement levels. Inducement levels are your first initial pullback after a break of structure. That's just like a layman understanding of an inducement. So inducement is more or less like a liquidity area whereby price tends to like invalidate a bias in the market. So maybe, for example, if there is a demand zone which is lower and there is an inducement level here, so it means that price wants to drive lower to clear the stop loss of people that are planning to buy from that immediate low. So that immediate low now is your inducement level. So price is likely going to invalidate it to tap into a demand here. So whenever you see a demand area, other block or anything can call it, that are very close to the inducement, it's high, it has a high chance that it will play out, especially if there is a place where you can mark out the market is tending to get to this area, then you can mark it and then take it. So on this video I'll be showing you how you can be able to leverage on this information. So this one is on GBPJPY, and on GBPJPY last week, that should be last week Thursday, we saw that on a 15 minutes level, 5 minutes and 3 minutes time frame, market give us a valid supply area. You get a supply order block which has an inducement very close to it. And if you check from a lower time frame like your 3 minutes and 5 minutes time frame, even on 15 minutes time frame, you can see that market created a kind of a structure giving us a sweep of liquidity, a market structure shift, and then an inducement that is very close to an order block or a demand block. You get. So markets entered the area and then pushed up to enter the supply area, and the moment market entered the supply area, it does give us a kind of a double top liquidity. You get. And you sold from there, selling from there to a higher time frame liquidity area. Yeah. So higher time frame liquidity area now was a place whereby market tends to just get there and end the trend of that selling trend. And when markets got there, for you to know whether markets can continue to push lower, we need to see a valid break of structure, and the market will leave us with a supply area and inducement around that area. And since the market didn't get to do that, and if you check from your candlestick pattern on a 15 minutes time frame, you see that whenever you have a candlestick pattern that is this way, a red candle, a little green candle, and then another green candle. So green candle now in this concept is presenting your default candlestick colors. You get. Red and green is just like the default candlestick color, meaning that red is where market is selling and green is where market is buying. So but on my configured like chart, the one I use my hand to set, so I made ash color to be my selling candle, while blue color to be my buying candle. So on my own chart, you see that the red candle, there was a small red candle around that our higher time frame liquidity area whereby the selling trend gets to end, and that was more or less like a trend line which the market just get to sweep from a lower time frame. So when markets get there, it gives us something that looks like an end pattern or a divergence pattern, any way you put it, divergence pattern, end pattern. But the candlestick pattern that formed around there was giving us a bullish confluence. Yes. So I intended to trade it, but I would say you trade whenever you are in the mood to trade, not just trading because there is a setup. So when you are not mentally sound, or when you are not sound, like you yourself know that I don't feel like stressing my brain to do any trading work now, just allow the chart to be, because you are first human before you start making money. So I wasn't in the mood to take any trades. I just saw the setup and I was like, okay, but let's just see how it goes. You get. So that was how I just did the setup, and yeah, the setup did well. Although the setup didn't give me exactly all the confidence that I've been looking for to take my trade, but that's part of it. So market from there tends to push up towards that supply area, which was the previous supply area that traded from Thursday. You get, so markets got to that area. Instead of markets to also sell from there or something, market get to break that level. So markets breaking a previous supply area means that the supply area is now weak. And if you check, you see that market tested that supply area for 1, 2, 3, and it was more or less the 4th time markets came there. And you can see that markets with a strong momentum candle, a build up of good bullish momentum candle, you see that markets invalidated that area, and invalidating that area are now giving us maybe what I would call a demand area or a retracement without an inducement. Yeah, it was still maybe a win, but for you to look for a valid confirmation, you can see that same candlestick pattern that formed around here, a red, then a little green, and then a green. Is more or less like confluence of 3 candlesticks forming together. There is a way to form it to look like a morning star, but this is not just a morning star. But I don't know the name I can give this candlestick, but I just always see it as whenever it forms, it gives me a bullish confirmation that market is likely going to buy from there. So that was how I do see the candle. And if you look well, you see that the market created a valid demand block around that on the 15-minute time frame, and from there market busted up. So market did the first touch and then entered well, and then give us the candlestick pattern. So even if you didn't enter immediately, maybe with a buy limit, you can enter a start execution, because even from here you can see that it also crossed our EMA 8. So closing above EMA 8 is more of a valid reason to buy more, or maybe to enter your initial positions. You get, so from that moment you see that market is buy, and currently market is closed. So I'm recording this video is already after 9 p.m. GMT +1 or UTC +1. So I'm in Nigeria right now. So you can see that market is buying from there, and I believe that whenever market opens, market must buy up to 19250. Yeah, market will likely buy to 19250 before market can do any change of trend or anything. If market didn't get there, then the setup has an error. So that's how I see it. And if you also notice, there is this build up of tension. I would say war or something, but I pray it doesn't turn out to be a war. I would still call it misunderstanding, crisis that is happening in that Iran-Israel area. So from the look of things, anytime there is tension in the market, investors tend to push more funds into gold. And you see that some countries are also oil exporting countries will likely have more oil to sell, since one of the major areas of oil exports is Israel, and right now they are in conflict. They will likely close down part of their oil, so other countries likely sell more. So slow key somehow, I think the US oil will likely do well at the moment. US oil, gold, and all some of those commodities that normally take leverage whenever there is crisis or tension. So I think we also should put more eye, and we should also focus more on some of these instruments, and maybe you can see good buy trades. And whenever you get a good entry, I think I will likely lock up some positions if I should see a good entry from a valid demand area that is still starting up. So I will likely take entries and maybe lock it and try to see how far it can go. So let's just see how the week goes. And from the look of things, the week will really go well. We're really going to make money this week, and I claim it, so you too should claim that too. So till then, let's say the thumbs out, Jovianking trades, remain profitable. Bye for now.